Well, hello everyone. This is Tyler Ford, Tucson, Arizona with eXp Realty, and welcome to Living in Tucson, your Tucson real estate connection. And over the last half or so, I was doing monthly lives where we would log into the MLS and take a look at home inventory levels. Because, in my opinion, home inventory levels, economics 101, supply and demand, is what's driving the market and the leading indicator. And home inventory levels, I felt that there was starting to be a shift. And sure enough, home inventory levels started to go up and home prices started pulling back. And then all of a sudden, home inventory levels went down again and put upward pressure on prices. But I feel we're in the middle of another shift. And that shift is we're kind of at a standstill in terms of sales volume going way, way down and buyer demand going way down, although home prices are not going down because home inventory levels are low. So we're in a weird situation in market right now. So I'm going to start to do my monthly lives and just give you some insight in terms of what's going on from a home affordability standpoint and then also inventory levels. So with that, I'm going to share my screen and we're going to dive on into a little bit of news and what's going on here in the Tucson housing market. Okay, so the first thing that I want to show you is just interest rates. And as everybody knows, interest rates have been going up, up and away. If we look here, give you a little bit wider. So pre-COVID, we were sitting on a 30-year fix below 3%, if you can believe that. And that's why things were plugging along and putting upward pressure on home prices because of home affordability was still relatively low based on interest rates. But as interest rates have climbed and home prices have gone up, it's created a situation where home affordability is no longer there. So buyers are sitting on the sidelines. And if you look a little bit of mortgage news, if you look at there's the Mortgage News Daily that I subscribe to, and then it lets you know mortgage applications in terms of volume. And we're at near a 30-year low. So you can look at the refi index, and as interest rates have gone up, refis have disappeared. I mean, they're still happening, but you can take a look at this chart here in terms of the index. And then this is the purchase money index on a 30-year fix. So as interest rates have gone up, buyer demand has gone down, and therefore mortgage applications are now at a 30-year low. And then if you jump over here, there was an article, the Redfin CEO, there's a lot of news out there. Go look at it. You can see he's got a lot of good information, but he's saying the housing market has hit rock bottom and sales slump, and this slump will last a long time. But he goes on to say that this is the worst of it. So if there's any silver lining in terms of sales volume and what's going on with our market, he says that it can't get much worse than it is. But if you look at some of the bullet points, housing market can't get much worse. From here, according to Redfin CEO, high mortgage rates and high prices have crushed home affordability. The market is in a freeze, sales down, and it's going to last for a long time, he says. So unless there's a catalyst that's going to cause home inventory levels to go up, which will push prices down, he thinks that we're going to be in this pattern here for quite some time. And then if you look here, the median home sales price across the country is 420, and I'm going to show you something else that kind of backs that up. But again, it goes on to just say that buyer demand's disappeared as interest rates have gone up. And again, home values going up double digits since COVID year over year. Home affordability is at an all-time high. And then if you look at this chart, this is a chart that Goldman Sachs puts out. It's the Home Affordability Index, and it's an inverse relationship as the chart goes down in terms of this graph here. We are at an all-time high in terms of home affordability, even higher than back in the last meltdown, 07, 08. And then you can see as there was a ton of inventory and low interest rates, home affordability was extremely affordable. So this is a good little chart. And then, so now let's dive into what's going on here in Tucson, Arizona. So right now, we have what is called the Market Action Index. And we're still in a seller's market, but it's nothing like it was uh, 6 months to a year ago, where this index was in the 90s, where there was multiple offers, multiple buyers coming to the table with offers that were above and beyond list. The good news for buyers right now, homes are sitting longer. You're not competing against multiple offers, even though things are selling and home values are holding. This index has started to tick down, and in order to get more to a neutral market or even a buyer's market, this index needs to drop another 15 points from here. So this is the Market Action Index. And then if you look at our median sales price right now in Tucson, our median sales price is 430. We're off the highs of 450, so we've come down by about $20,000 in terms of the median list price in the MLS. And if you look here in terms of market segments, it breaks it down by price in terms of absorption. So there were 26 listings in the 875 price range, of which 25 of the 26 got absorbed and went under contract. So you can kind of see, and then the lower the median price point, the lower the days on market. So again, due to home affordability, a home that's at 299 or below has an average days of market of 24 days. So now let's take a look at, home inventory levels here in Tucson. So you can see here, right here is when I started doing my lives, and home inventory levels started to go up. So at the lows, we were in the 500 to 600 range in terms of active listings in the MLS, which is crazy low. And then we went as high as about 1,600, and now we're sitting at about little over 1,000 units. So inventory levels are still really, really low. And again, until inventory levels, there's some type of catalyst that's going to cause inventory to go up. Good or bad, home values are holding on as a result of low inventory. And to compare Tucson nationally, think about Tucson, it's always been best kept secret in terms of home affordability. And it still is, where homes in Tucson are more affordable than most places across the country. But if you look at national numbers, the median sales price is $440. So Tucson's about $10,000 less than the median national sales price across the country. And if you look at Phoenix, we're a couple $100,000 below them in terms of the median sales price. And then if you look at inventory level from a national standpoint, inventory levels are starting to tick up nationally. So there are pockets that are starting to struggle. Right now, Tucson and Arizona is really not one of them, but inventory levels nationally, we're in like the 250,000. Now we're sitting at about 525,000, 28,000. So inventory levels across the country nationally have more than doubled. So again, like to keep it short and sweet. And I am going to start to do my monthly lives where we're going to log in, take a look at some news, and then take a look at inventory levels. And again, I do feel we're in the middle of another type of shift. It's different. Home inventory levels, as long as they stay low, are going to hold prices. But the big news here is back to the Redfin CEO in terms of, and he's not the only one, that our markets hit rock bottom because buyer demand's gone away, mortgage rates up, and the median home sales price up, which is now pushing people out of this market from a home affordability standpoint. So if you have any questions or comments on YouTube, go ahead and comment below, and I'll be back at you next month with another live. In the meantime, make it a great